Ryan Seacrest here. When you have a busy schedule, it's important to maximize your downtime. One of the best ways to do that is by going to ChumbaCasino.com. Chumba Casino has all your favorite social casino games like spin slots, bingo, and solitaire that you can play for free for a chance to redeem some serious prizes. So hop on to ChumbaCasino.com now and live the Chumba life. Sponsored by Chumba Casino.
No purchase necessary. VGW Group. Void where prohibited by law. 21 plus. Terms and conditions apply.
Do you want more success, more growth, more results? Then it's time for the Boundless Success Accelerator from the Modern Observer Group. This isn't your average coaching program. It's where top performers come to dominate. Weekly group sessions, on-demand coaching, a community that's got your back, and a power-packed library of tools to supercharge your business and career. No more excuses, no more waiting. Get in, level up, and start building the life you've been dreaming about. Visit us at modernobserver.com/boundlesssuccess to join today. Let's get you to the next level.
Hello, everybody, and welcome back to the Happily Never After show. I'm your host, Kate Mollison, grief and bereavement expert. And this week we're talking about a topic that resonates with me personally based on my own loss story. We're talking about mortgages and finances after loss. I'm here with a peer and friend, Eric. Thank you so much for being here today.
Oh, happy to be here, Kate. Thanks for doing this.
No problem. So, Eric, could you just do me a favor and tell the listeners about yourself? What's your credentialing? All that good stuff.
No, for sure. I've spent the last 26 years in the mortgage space, specifically on residential lending when it comes to people financing their homes and things along that line. I've been licensed ever since licensing came out back in 2007, 2008. And I've predominantly been in management and also on the origination side of mortgage lending. So that's it in a nutshell.
What does origination mean?
Oh, good question. So an origination is basically the first person that you talk to when you go through the process of maybe buying a home and financing that home. So an originator is someone who basically structures someone's finances when it comes to mortgage debt. How are they going to go about getting a mortgage to purchase a property or refinance a property in that regards as well?
So it sounds like you probably should have been who I talked to after Craig died, because I didn't know that was even part of your job.
Yeah, I know it is. And we tell people, listen, we're the, we don't necessarily are the operations side of facilitating the mortgage, but we are the advice side and the person that you ask all the questions to. And even if I don't have the answer, there's going to be places where we can go and get the answer and look at those different scenarios. And I think the 26 years is kind of helpful because we've seen just about everything, right? So in that period of time.
Yeah. And I mean, I think for home purchasing purposes, or the word mortgage can be super intimidating to people because money is very personal and you feel like you're outing yourselves if you're not making good financial choices and you're having to air your dirty laundry to this person who will potentially pass judgment, and not knowing that there's so much more to the mortgage officer, the mortgage, lender. There's more to that than just someone who's gonna yes or no, you can buy a house. And I think that that's an incredible piece of information if nobody takes anything else away. I'm looking back at my own situation. And when I was standing there in the aftermath of Craig's death, I kept asking people. It's not like I was completely alone. I had a little bit of a network, a support system. And my father-in-law, my parents, my, friends, a couple of relatives. And it was all like, what the hell am I supposed to do now? And nobody really could tell me. And all of these people have purchased homes before. None of them ever recommended that I consult with a mortgage officer. It wasn't until the mortgage company for the house we were living in remanded payment in full that someone was like, you should talk to a financial advisor. And then at that point, all the financial advisors didn't want to talk to me because I had less than like $1 million in liquidable assets. So my head was spinning based on 100%. All the trauma and everything. And it's a complex situation. I understand that, most people won't have the noise that I had, but to give you a little bit of background, Craig and I had lived in the house for 5 years. Prior to purchasing the home, I had been a victim of identity theft and my credit was under repair. Even though we were able to resolve that, it still affects your credit and that takes time. And I had done the cars, both of our vehicles, in my name. I couldn't qualify to be on the mortgage. My credit didn't help us. It actually hurt us. So when we bought the house, we put it solely in Craig's name. So the title was in his name, the insurance was in his name, everything was just him. He didn't have a will.
Oh, and that's problematic, right? And you experience that, and the reality is as in the loan business, we have to sometimes pull back from just what makes strictly financial sense and look at also protection sense. And that's what you experience. And there are many times where, as an originator, people want to know, well, what's going to get us the best terms, right? And even within that process, there's got to be an understanding, right? There's got to be an understanding, and you have to have advice from people that say, hey, listen, this may be the right way to structure the finance, but there's still other things that can be done to establish protection, right? And I think that was probably what was missing from your and Craig's scenario is yes, okay, Craig might have, had the better credit, didn't have the debt, and so this was the best way to qualify for the loan.
Right.
But at the end of the day, there should have been, potentially legal advice on, okay, but what about title? What about ownership? What about the deed and the mortgage part? Because a lot of times people don't realize this, but in the mortgage space, there's plenty of loan options that allow for multiple people on title as owners. And those people even have to show up on the day of closing and sign the mortgage deed. They're signing responsibility for a mortgage, like they're acknowledging that there's going to be a debt on this property and that debt comes first, but they're as much owners as the person who's gone out and asked for the loan because they had the whatever credit score or whatever debt to income ratio to get the financing. And so that's the piece that really should have been or could have been potentially established.
And I think you're alluding to a quitclaim deed, essentially, which is that legal titling paper, or are you referring to something different?
That's a great question, because this idea of the quitclaim gets thrown around a lot. And I think there's a lot of misinformation about it. Quitclaim is the process of, hey, I own a property and I'm going to establish or give some of my ownership or all of my ownership in this property to someone else. And it's a document that gets signed, and I'm not a lawyer, so I don't want to get too into the weeds on this, but ultimately what happens is it's an after mortgage process that someone may add someone to the title as an owner of the property.
Gotcha.
But the misinformation is, what a lot of people don't realize is that if I own the property and I want to quitclaim part of the ownership to my spouse so that we're both on title, I technically have to go to the mortgage company that has the debt on the property and basically get their permission.
Really?
And yeah, you do, because if you go and you look at the mortgage documentation, I'm not under authority to just change ownership of the property. I have a liability. I have a debt. And so
your fiduciary responsibility, right? Like,
well,
you have a responsibility to act in their financial best interest.
Correct. Or even myself, if because oftentimes, and this is the part where, you go and you're signing a mortgage, right? And you're signing 100 pages of documents, and they're just
Feels like you're
flying
signing
through.
away your firstborn, right?
Yeah, and we say it, and you say, "Oh, it's like you're signing your life away," and in essence, you are, right? And if
Mm.
and so many times, we don't pay attention to all of those documents and what they're saying. Well, in essence, if I turn around a year or a week or 2 years later and I decide to add my spouse to that title without going back to that mortgage holder and gaining their permission.
How to have fun anytime, anywhere. Step 1, go to ChumbaCasino.com.
ChumbaCasino.com. Got it.
Step 2, collect your welcome bonus.
Come to Papa Welcome Bonus.
Step 3, play hundreds of casino-style games for free.
That's a lot of games. All for free?
Step 4, unleash your excitement.
Woohoo!
Chumba Casino has been delivering thrills for over a decade. So claim your free welcome bonus now and live the Chumba life. Visit ChumbaCasino.com.
No purchase necessary. VGW Group. Void where prohibited by law. 21 plus. Terms and conditions apply.
I've actually, in a lot of cases, I've created a form of technical default because I have essentially defaulted on my responsibility because I've given ownership to someone else. Now, but what I was really talking about is upfront. Like initially, don't go through the quit claim process. Like say up front, like I'm buying this home, I'm the one responsible that's qualifying for the loan, but I'm going to have someone else that's on title with me as an owner. That person on the day of closing signs the mortgage deed, even though their credit, their income, their debts were not used as part of the loan process. And so under those kind of guidance, we're equally owners of the property. We've signed responsibility to the property. And ultimately, if something were to happen to me, my spouse would be protected in that respect.
I wish I had known that because I went to the closing, but I was there purely for moral support when we bought the house.
Yeah.
I literally just sat at the table and watched him sign everything. And then he was like, handed me the keys and was like, look, we own a house. And I was like, well, you own a house. So, and then that became a running joke. I was like, well, if you ever decide to leave me, at least I can make a tent between our two cars. Like it became a running joke, but now it's ironic how it actually turned out that the way we joked about was he took the house with him essentially. So when he died, the mortgage payments don't stop, right? And it was a month before Christmas and I lost 60% of my income and everything was kind of up in the air, right? And so I admittedly did not make the December mortgage payment because I literally could not afford it. Buried him on December 5th. Like I have to choose between burying my husband and paying my mortgage. And then it came down to I have to choose between fuel oil and Christmas for my 2-year-old and 10-year-old. So those are hard financial decisions. I called the mortgage company, obviously, at the end of that. And I had read a bunch and heard a bunch, like all my friends scared the crap out of me. We're like, don't tell them that he's dead. Don't tell the mortgage company. And so everything's up in the air. So I called them and just told them, like, hey, I'm so sorry I missed that payment. Can we just defer the payment? Sure. I get a letter in the mail the next week remanding payment in full for the mortgage. We'd only lived in the house 5 years. And so to see a bill for $347,000 and some change, I know the number, it's not important though.
Yeah. Right.
Bill will forever be burned in my memory.
Right.
But to get a letter that starts off like the audacity of them to say our deepest condolences in the letter, like, dear Mrs. Mollison, we've learned the passing of your spouse, our deepest condolences to you and your family at this time of need. And then the next page is a bill. And it was like a slap to the face. So I called them and they were like, oh, we can fix that easy. Let's just refinance the loan. And I told them the whole story about how I didn't qualify for the loan in the first place. And and they were like, well, just try. So they did.
Yeah.
And I felt like working retail when I had to hawk credit cards when I worked at Sears. It's like, I know people weren't going to get approved, but it was my job to pressure them into doing it.
Yeah.
The mortgage company was like, just do it. And I had no other option. So I did not get approved. And they were like, oh, we'll send out a notice to let you know. 2 weeks later, I get a notice saying we have 90 days to vacate.
Wow.
It was catastrophic. So in that situation, it was us trying to just secure household. At that point, I was like, I've got 2 months and we're homeless.
Yeah.
So in that type of situation, if someone doesn't qualify for a refinance and they're not on title, are there any type of options or solutions or things that mortgage companies, mortgage officers can advise or help? Like, how can we be strategic when that atom bomb goes off?
Yeah, no, there's a few things, and I think obviously that situation is cataclysmic, right? Yeah, and I think here's the thing, and even within, the laws of consumerism and stuff like that, I think that there could have been and should have been other advice, right? Like that goes beyond, because a mortgage company can send a letter, but the reality is that there's still there's still an estate process, right?
Yeah, we ended up in probate because he had no will.
Yeah, right, exactly. But even that, like all liabilities and things like that are typically put on hold until that process is exonerated and goes all the way through, right? And so,
which would have bought me 19 months.
Correct. Yeah, right. But even at that point in time, that it would have given you more options, right? At least something to consider, and maybe a different market, maybe figuring out what to do, with the property,
time to repair my credit.
Yes, exactly. Or even
wouldn't have felt so urgent.
Correct. Exactly. Now, obviously, I think on the other side of things going forward, there's the legal title perspective of going in and having title. But there are some loan programs that don't necessarily allow, necessarily a non-borrower to be on title on the day of closing. And so those are conversations to be had. And then also, well, what are our options and steps, outside of that? And that's where, yes, having, to me, communication is number one. Like it's a matter of opening those lines of communication, of knowing what's going on, right? And then making sure, like things like a will, like life insurance. And some people say, well, life insurance, well, listen, I mean, if I have a spouse or a significant other, unless I'm saving 100% or, 80 to 100% of that person's income, then I probably need some form of life insurance. Because if something happens to them, yes, all that income is gone, but the bills still remain.
Yeah.
Right. And so having those kind of conversations about, number one, the will, the estate planning, but then even the life insurance. And a lot of times what people don't think about is like, yes, when you're younger, that's when it costs the least amount of money. That's when you have the option of really getting even the basics of covering the mortgage, covering the debt, some of those things. So when that happens, that person has the ability to be made whole, right? At least on the liability side, and then have options to move forward. Because had that been in place, right, you could have had life insurance that could have easily paid off the mortgage debt and would have provided you a whole different set of, possibilities.
Completely changed the trajectory. Now, here's the thing. He did have a life insurance policy, but I didn't know about it for 3 months.
Wow.
So he was a state employee working from home, and his boss called and was like, hey, we need his computer stuff. And I had to clean out his home office. So it was like January, and I found an envelope. A friend of mine was like, what is this? I was like, I don't know, Voya, looks like a phone bill. And I opened it up, and I was gobsmacked. It was not enough to cover the full cost of the house.
Correct. Yeah.
But it was a policy of I can't even speak, of substantial value.
Yeah.
And so at that point, I'd already tried to do the refi. I'd already, the sheriff was parked at the curb. They hired the sheriff to park at the curb 6 weeks after my husband passed away. So I would go to work for 10 hours a day, working retail management, and put my kids on the school bus in the morning and go, okay, I hope we can get into the house when I get home, because when you leave, they can change the locks. So it was petrifying to just not have that basic need of like shelter and security. It was such a mind F, if you will.
Yeah, of course.
And so not having information about what other options there would have been and feeling the impending clock, everything is a race. Once somebody dies, you are racing all sorts of clocks, and it is so overwhelming.
Yes.
So we found the life insurance policy, and I went to the lawyer, and he was like, well, you have no legal claim over the house. You're not on title, deed, mortgage, nothing. Insurance. You're not even on the insurance. You have nothing. I was like, oh. He's like, so you don't have to do anything. You can keep paying the mortgage and they will rescind the remand and you can keep living there. I was like, all right, let me do the math. The policy would have bought us 5 years.
Yep.
And so at that point, it was like, I will be right back where I am right now because the
Correct.
house, the major repairs it needed, we'd only been there 5 years, so it didn't really have enough equity to draw on. And that was the other advice. They were like, well, let's just like take out a home equity. I'm like, if you're not going to approve me for a refinance, you're probably not going to approve me for a home equity loan. But in those situations where people do.
And then you would have.
Hello, it is Ryan, and we could all use an extra bright spot in our day, couldn't we? Just to make up for things like sitting in traffic, doing the dishes, counting your steps, all the mundane stuff. That is why I'm such a big fan of Chumba Casino. Chumba Casino has all your favorite social casino-style games that you can play for free anytime, anywhere with daily bonuses. That should brighten your day a little. Actually, a lot. So sign up now at ChumbaCasino.com. That's ChumbaCasino.com.
No purchase necessary. VGW Group. Void where prohibited by law. See terms and conditions. 18+.
Yeah.
Where people do have equity, that's an option for them potentially. Can you talk a little bit about that?
No, it really is. And we've experienced that, right? I mean, that's been one of the real, financial benefits that's going unrealized right now is that since COVID, property values have gone up significantly over the last few years. So what a lot of people have done is what we look at, and this is what I tell people. They say, listen, you have all this equity in your home right now. And if I ask you if you need it, your answer would be, no, I don't need it. We got a 2% mortgage rate from 5 years ago. We got all this equity in our house. We're fine.
Which, for those who don't know, 2% is ridiculously good.
Yes, it really is, right? And it's also, and it becomes a little bit of a hamstring too, because you end up with this mortgage at 2%, 2.5%, whatever it is, even 3%. But then what happens is if people run into any financial difficulty, they start adding other debt. Right. So now you end up with credit card debt, or you got to get a new car. And now, maybe that auto loan has a 10 or a 12% interest rate. And you're looking and you've got all this equity in a property, but you have this 2.5% mortgage. And you say, but I can't get rid of that. It's too cheap. It's too low. So now what ends up happening is we end up paying all of this interest on all of these other things when we have this asset that we can't really utilize. So what I tell a lot of people is two things. Number one is if you have a lot of equity in a property or any amount of equity in the property, you should always have some form of a line of credit just sitting there, right? Even if you don't use it, right? Because the reality is, if you needed to access equity in your house, that's the point in time when you're probably the least likely to be able to get it.
Wow.
Because when I need something is because of a financial need, and that financial need may also be the reason that now I can't get access to it.
Yeah.
Whereas the important part.
Do that again for the listeners. Like that's so important. I want to hit on that again.
Yeah. It's the concept of if you need it, you probably can't get it. But when you don't need it, that's when you get it for the time that you need it, right? So we try to explain to people, listen, you have equity in your property. Just set up a line of credit. If nothing else, and I use the word opportunity, you never know when life throws you an opportunity or throws you a challenge. And a line of credit or something like that gives you the opportunity, gives you the ability to really take advantage of both. or get out of, the downside, right?
Situation.
Yeah, a furnace breaks, or a tree falls on my roof and I got to get a new roof,
Yeah.
and insurance is taking their time, whatever it might be. In the meantime, you've got to fix your roof,
Yep.
right? Well, contractor's not coming out on the good word of your insurance. They want to get paid. Now, you could now you end up paying more, right? Because you find a contractor that's, well, I'll wait for the insurance money, but now that roof's going to cost you.
And then your insurance premium goes up, and then there's
Of course.
Yeah, so we had replaced our septic main line 2 years before a year before his death. And so we had depleted our savings to do that. So no savings, no will, no income, and then struggling to get like survivor benefits and pension payout because there was an age difference between us. So I went 12 weeks basically without pay, trying to like navigate all the stuff, but no one told us about that as an option in any of the home buying process. And it wasn't until, so I took the life insurance policy and I ended up buying a condo, and I bought it outright.
Yeah.
And I took out a home equity line of credit on the condo, and I was able to buy an apartment for my parents to live in because they were living in our in-law apartment, and my condo was not big enough for all of us.
Sure. Yeah. Makes sense. Yeah.
And then having that line of credit was great, but I also feel like I got duped because what I didn't know until after the fact, or I guess I didn't understand, was it was a variable interest rate.
Correct.
So it started what felt kind of high. I think it was like 11%, which I was like, oh, that's gross. But like, hey, that's the best I can get for my credit. That's pretty good. The fact that I even did that on my own without a cosigner was impressive to me.
Right.
But then by year 3, it was like 19.5%. And I was paying out the nose. I was bleeding money.
Correct.
And it was almost to my detriment. And I feel like it defeated the purpose of even doing that. But I guess the other thing I didn't know is there's a couple different options in that regard. There's home equity line of credit. There's a home equity loan. There's cash out refinance. Like there's so many things that all feel the same.
But they're different.
But aren't well explained, and you don't know how to leverage those tools, resources, and access to your own money because the information is very convoluted. So can you high level give us a definition of like those 3 types of things and how they may help someone in a situation similar or adjacent to what I went through?
Yeah. So it really comes down to, what I would say is like, what's the next 1 to 5 years look like, right? Because if I'm in a position where I have equity in my property and I don't know what opportunities may come up, or I don't know what challenges may surface, then a home equity line of credit is a great way to go, right? Because what happens with those is that you pay nothing on them unless you take money out of it, right? And so a line of credit will be set up, and it could be you have $100,000 line of credit, all right? So if I have $100,000 line of credit, every single month I could pay 0. I could have 0 interest. I could have 0 payments. Now, if all of a sudden the furnace breaks at the house and I need to get a new furnace and that costs $15,000 and I use my line of credit, I'm now going to pull $15,000 out and I'm going to start paying that interest on the $15,000 only. Okay. So in that respects, like a line of credit is great because I don't really know what I'm going to need it for or what things may come up, right?
Or how much you're going to need.
Right, exactly. And that's the challenge, right? Because a home equity loan is an actual loan. It's like, oh, we're going to give you $100,000 and you're going to start paying on it tomorrow, okay? Or whenever the first payments due. But if I didn't need $100,000, well, that wouldn't quite make sense. Now, I might be able to get a fixed rate or a fixed payment plan or whatever, and that's great, right? You're not dealing with that variable nature of the home equity line of credit, which is variable, but even in those respects, there's options, right? You may have had a very high interest one when you first took it out. If I were to look back at your scenario, what I probably would have asked is, number one, what are you taking this out for? Do you have a specific reason that you're taking it out for? And if that reason was, yes, I need to go, get, a property for my parents or this or that, I would have said, well, okay, that means you plan to use this. So maybe in your case, we should look at maybe taking out a small mortgage or a home equity loan, so that you have that set of money under a fixed payment plan that now you can count it into your finances, what it is. Or you'll have people that say, well, a lot of times we'll ask a question like, well, what purchases do you see occurring in the next 5 years? Like, do you have some incoming purchases? And that's where the conversation can lead towards, well, my car is 8 years old. Okay. Or, my daughter is 15 and she's going to be going to college in a few years. Like, okay, well, these are all part of, okay, well, what's the plan? What does that look like? How are you going to handle that debt? I think one of the big, issues that we have, in the United States or in general is we don't really have debt managers. We have asset managers. We have financial planners. And I think there's financial planners out there that do a good job of planning on the debt side, but they don't necessarily have their credentials in debt management. Their credentials are in asset management and growing assets, right? Like growing assets is great.
And debt management is different than like credit repair things and all of that stuff.
100%, right? Because and we're a debt-driven country, right? We take out debt willfully
for us to incur debt.
Exactly. And it's, and so that's where it's not hard to get into trouble when it comes to the debt picture. So we covered home equity, line of credit. Really there, if I don't know what might be around the corner, but I want to have some protection in place in case I do need to borrow. A home equity loan is the same type of thing, but it's a loan payment, right? And sometimes the interest rates on home equity loans can be a little bit higher than, say, like a fixed first mortgage type of a loan. And then you have the regular refinance, the cash out refinance, or the 30-year mortgage, where I'm going to take out a mortgage. It's on a 30-year term. I'm going to have a repayment schedule to that. And more often than not, those rates tend to be fixed. I mean, yes, there can be some programs that might be variable, but usually fixed rates is what you can experience there. And that's what we typically would advise someone who's, who needs to take out a larger amount of debt in order to, make things go, so to speak. Did I cover that? I think.
Yeah, no, that's great information. And like I said, I think
It is Ryan Seacrest here. There was a recent social media trend which consisted of flying on a plane with no music, no movies, no entertainment. But a better trend would be going to ChumbaCasino.com. It's like having a mini social casino in your pocket. Chumba Casino has over 100 online casino-style games, all absolutely free. It's the most fun you can have online and on a plane. So grab your free welcome bonus now at ChumbaCasino.com. Sponsored by Chumba Casino.
No purchase necessary. VGW Group. Void where prohibited by law. 21 plus. Terms and conditions apply.
I think that this stuff is so large. It's bigger than us. And we don't realize that we need to have these conversations as a preventative measure versus a palliative measure. And I'm finding that a lot with the death sphere. It's it's all going to happen to us. Why aren't we doing more to prepare for it? Because had I had these conversations, had Craig and I had these conversations with someone like yourself, we would have had a will in place. We would have had, life insurance policies in place as part of this financial, holistic health and well-being. We would have had savings or an investment portfolio that we could have drawn on. We would have had equity in the house established and had that titling taken care of and have been able, I GoFunded me his funeral. If we had had equity that I could have drawn on and had access to, I could have paid for his funeral.
Correct.
Still trying to figure out the life insurance stuff. Worst case scenario, the bills would have been paid and I wouldn't have had to make those tough financial choices.
Right.
I potentially could have stayed in the house until at least my son finished middle school.
Right.
And instead, thankfully he went from middle school into high school the year after. but we'd moved to a condo in town still. But then he went to a technical high school, so different school district, which is fine.
Mm-hmm.
I think he probably would have ended up there anyway. But what a different trajectory. Like I probably still would have ended up getting rid of the house because there was large repairs and it was, not for nothing, almost 4,000 square feet. It was a lot of house because there was a lot of us in it, 4 adults, 2 kids, a dog, 3 cats. Like it was a lot. I didn't need that much space after. And I really just needed to separate from that. So I probably would have ended up moving anyway, but it would have been on my terms. It wouldn't have been in crisis and under duress.
Yes.
So I'm so grateful for this information that you're giving to people because no gatekeeping here, right? We want to make sure that people
know exactly
information, whether they're in crisis to kind of put their feet back on the ground and strategically problem solve, or the hope is get them before something happens and have them have a solid plan, even if they're not ready to get a mortgage or do anything. Ask questions to someone, right?
Exactly. Yeah, ask questions, and I think that's where the importance lies is having that open dialogue. And I tell people, I say, listen, you may be buying a house tomorrow, but that does not mean that our relationship ends at this point. Yes, it's a transaction. The way that I'm paid in life is through the transaction, but the reality is that you've got to be there and available to those people in perpetuity. Oftentimes we're doing annual mortgage reviews. It's amazing. You'd be surprised at how much benefit comes from an annual mortgage review. I'll have benefits that come from having a review with someone that does have a 3% mortgage rate, right? Because oftentimes we find that yes, they had this mortgage rate, but now they've acquired other debt or they have other priorities, or maybe the house is too big now, or maybe we need a new one. And so, they're being held up thinking that, well, I got this low mortgage, and so I really shouldn't do anything. But the reality is when it all comes together, when we get rid of maybe some other debt, because now they have all this equity in the property or whatnot, we actually can find that there's opportunities for them to now take that next step in life that they're wanting to take, right? But they're just not given the opportunity to do it. So no, I think having these kind of conversations and that type of conversation right there of what are your concerns? What are you guys, how are you structured in having that conversation moving forward is very, very important, just so that you're in that position to, at least feel like you have options, So.
And I think people don't realize, like, you can go into any bank and ask to talk to their mortgage officer and just ask questions. Just say, here's my plan, here's what I'm thinking. Do you have advice? And generally speaking, the mortgage officer or whoever at the bank, yes, they want to make a sale, but because you have a fiduciary responsibility, you're not going to give people bad advice about mortgages, and they can cross-reference interest rates. Like that's all publicly shared knowledge and information. So you have a diligence to do right by people. You're not there to sell them something per se. Yes, you get paid for doing your job, but you're there for information. So on that note, how do people access you? Where can people find you to ask you questions or work with you and get more information?
No, thank you for that. So I'm local here in Connecticut, but I do function kind of throughout the, various parts of the country because I'll have clients that buy in other states and things like that. But the easiest way to catch me is the website. My website is pretty straightforward. It's teamloancoach.com. So that's team, TEAM, loan, LOAN, coach, COACH.com. And then, all of my contact information is always on the website. So that's the easiest place for people to find me. And then, you can find us on, social and other things, but heading right to that website's the easiest place.
That's your access point. I love it. And we'll make sure that we throw that link in the show notes so people can access it nice and easily.
Thanks for that, Kate.
Are about at the end of our time together. I'm going to ask you my favorite question to ask my guests. If you could impart one piece of knowledge or wisdom onto the population that we're serving, widows, widowers, what would you tell them?
I'm glad you asked that question. It's having the right team around you, right? And really formulating who those individuals should be. Yes, I might serve as a debt manager, mortgage expert, so to speak, and that is one person I think is really important. Also, from the standpoint of I deal with so many things house related, so we're constantly helping connect our people with contractors or other financial individuals. But I think having that well-rounded financial team is important to me. A good, someone that is a specialist in estate work, right? So had you had a real, specialist that understands the estate process and probate and all of that kind of thing, so that if something does happen, as you experience, you've got good advice for people that can just say, it's okay, we've got you. You don't need to worry about these things. There are steps that can be done and things that take time that do not happen overnight. So a good estate person that can give you advice in that arena. Also the financial person who can, help you, grow your personal, wealth and things like that. So if and when something does come up, you've got other ways of falling back on stuff. So I think having, a circle of people around you, and just start to look and say, okay, if something were to ever happen, do I have a go-to person for this area of my life? And so that's what I would leave with people, is make sure you have just that good circle of, professionals that you can go to and ask questions and get, feel at least that you can sleep at night.
I love that. That's so important. They say it takes a village to raise a child, but what we don't realize is it takes that village when someone dies as well. So how do we foster that community of support and bring everyone together versus isolate? So
yeah,
I'm so glad to have you in my network now. I'm going to be sharing you with everybody and probably picking your brain for my own personal stuff on the regular now. You can't get rid of me.
That's great, Kate. And I think I think people should feel encouraged. What you experienced and it's not unusual for people not to have these things in place. Okay. And so I do think there's a lot of opportunity if someone's listening to this message and feeling convicted or guilty or, whatever, that, this is normal. A lot of people have not thought about this, and we typically don't like to. I deal with seniors that do not like to go through the process of having these things in place. And so, for those of us that are still young and feel like life has a long, runway ahead of us, it's not unusual to not have this stuff in place. So you can kind of take a step moving forward today and know that you'll probably be in the lower percentage of people that are moving, forward in a good way.
It's so true, because we all think we have more time, and then life happens, and it happens unexpectedly. And it's better to have it and not need it than need it and not have it, as I learned the hard way. Even when Craig was a super smart guy and very financially literate, and, he was a numbers guy and a stats guy. And the irony in the fact that I was completely blindsided by the financial aspect is still, beyond me. But it's, even with all that intelligence and all that understanding and all that efficacy, we didn't have the advice and we didn't have the plan and preparations in place to mitigate what happened. Like, we talked about doing a quit claim deed at one point, and we just never had the time.
Right.
I promise you, if you're listening, you have the time. It's about how you use the time you have. So prioritize your financial health and well-being. Talk to Eric and get your mortgage questions answered. And if you haven't had a chance to go back and listen to any of our previous episodes, I invite you to go back and listen to the rest of the episodes here in season 2 and go back and visit season 1. This has been the Happily Never After show. I'm your host, Kate Mollison, and I want to thank you all for listening today.
You've been listening to Happily Never After, part of the Xvadio podcast network. You can catch every episode of Happily Never After, as well as the rest of the network at xvadio.com, the Apple Podcasts app, YouTube, Rumble, Spotify, iHeartRadio, Audible, Amazon Music, and wherever you find podcasts.
Hello, it is Ryan, and we could all use an extra bright spot in our day, couldn't we? Just to make up for things like sitting in traffic, doing the dishes, counting your steps, you know, all the mundane stuff. That is why I'm such a big fan of Chumba Casino. Chumba Casino has all your favorite social casino-style games that you can play for free anytime, anywhere with daily bonuses. That should brighten your day a little. Actually, a lot. So sign up now at ChumbaCasino.com. That's ChumbaCasino.com.
No purchase necessary. VGW Group. Void where prohibited by law. See terms and conditions. 18+.